Hey, welcome back to the Mining Pod. This is our news roundup. We're getting back in the saddle, as Charlie said this morning. We got to go through this week's Bitcoin and Bitcoin mining news with Charlie and Matt. We'll be back after a second with our sponsors.
Hey listeners, let's talk about revolutionizing your mining operation with Foreman. This isn't your average management tool. It's an all-in-one solution for reducing costs and significantly boosting your revenue. Foreman brings a cutting-edge dashboard to your fingertips, empowering you with automated energy strategies. This means not only curtailing around real-time prices, but also strategically enhancing your profit margins through demand response. It's about leveraging energy efficiency to its fullest potential. With Foreman, you get a system that scales with your business, inventory management for assets, infrastructure integration, and business intelligence. Foreman elevates the cash flow and production of your entire operation. To see how Foreman can redefine your mining operation standards, visit foreman.mn. With Foreman, you're not just managing a mining operation, you're setting a new standard in the industry.
Accelerated by Compass is the premier accelerator program for Bitcoin mining sites at any stage of development. Our managed services provide expert guidance in site procurement, construction, energy agreements, and mining operations. Compass helps clients meet timelines and expectations for operational excellence, from greenfield to retrofits and everything in between. Don't just mine, excel. Visit compassmining.io now to discover how Accelerated by Compass can power your success.
Are you a retail or institutional investor interested in Bitcoin mining companies? The MinerMag brings you free data and analysis from all major NASDAQ-listed Bitcoin mining operations to know who stands out. Check out visualized metrics and data-dependent stories at theminermag.com. Okay, as always, we're going to start with our difficulty update. We'll throw that to Matt in a second, and then we have much to talk about because we missed last week. We were in Nashville for the Bitcoin conference. Well, Matt was not there, but Charlie and I were, and we had so much mining news that we did not get to cover on the show. So we'll go back through that, and then we'll also go through the stuff from this week. Start again with our difficulty update, then go to Russia legalizing Bitcoin mining, apparently legalizing it. I feel like it's kind of like the old China story, it goes back and forth. Riot in the Bitfarms saga continues, part 4 or 5 of that. Bitcoin mining financing with Cantor, it's an announcement from Nashville, new ASICs from Nashville, Auradine and MicroBT. And then we'll finish up with Marathon buying a bunch of Bitcoin. So I will throw it to you, Matt, first.
Yeah, so we just had a 10% difficulty increase. The largest nominal increase in hash rate, right? The largest nominal difficulty increase ever in Bitcoin history. And we kind of talked about this potentially happening a couple weeks ago when there was a downward adjustment, telling the miners not to get too comfortable because a bunch of new Bitmain hardware was coming to be released, and there was some crazy plans amongst a lot of the public listed companies to bring a lot of hash rate online. And I think that's really the story here. It's like the great industrialization of hash rate. I feel like these large miners with access to capital are really boasting that. I think like 15 exahash was shown to come online in monthly reports. Someone should fact check me on that, but those are the numbers I saw.
That was perfect. 15.
If you're average Joe miner out there, you're definitely in pain. And really everyone's feeling the pain, right? But some are kind of more well capitalized or have access to capital better than others. And it's tough out there. What do you guys think?
Yeah, I had to turn some rigs off this past month. And that's not been fun. This is a very painful time, but also like this is inevitable. I'm surprised the dip lasts as long as it did, because we're now in hash rate coming online, the unrelenting upwards.
I don't have much more to add there. I do want to highlight this piece from Foreman Mining. So I'll throw it back to you, Matt. We have this piece from Mitch, who kind of looked at a few different industry metrics and mushed them together, and we got a cool little Twitter thread blog post out of it.
Difficulty going upright doesn't necessarily mean it could be, or it has to be bad for miners, right? If price outpaces that rise, it's okay. Miners are actually in a better position, earning more revenue. I think what's neat that Mitch did here is he created kind of an industry-wide profitability metric by taking hash price, which we talk about a lot on the show, which is just the revenue that you get as a miner per per unit of hash rate. And he merged that revenue together with the cost side of the equation of mining and just made a couple assumptions on kind of what the direct profitability of a machine, or whether there's miners are cash flow positive on average or not, industry wide. And so what he did was he made some assumptions to get a network efficiency level, or the kind of the average unit of hardware that's out there. He used Coinmetrics nonce analysis data from Kareem Helmy, shout out. And he combined that with average US industrial electricity rates. And so taking that together, he formed the cost side of the equation. It's probably a little closer to the actual hosted cost of electricity versus what I think a lot of the miners are getting out there. I think it was around 8 cents per kilowatt hour, or he's got it in megawatt hours, so 80. But I mean, nonetheless, it kind of is showing what we were talking about before. Profitability is very low. Why? Because difficulty is very high and the price has not really matched.
Yeah, huge shout out to Mitch. I actually described this idea at a high level on a previous Mining Pod episode, the one where we do review the nonce analysis from Coinmetrics. I'll say that I think, shout out to Mitch, I think this should probably be the one chart, overall view of industry health and profitability going forwards for the time being, until we have even more granular data. But this does give you the snapshot. There's been various attempts at this. I think Charles Edwards from Capriol had some one chart, which I think was a good high level view of pain points for miners. But this one, I think this is probably if I could just do one chart, which is not hash price, it's this chart.
Yeah, thanks to Mitch for putting that together. Let's move over to some other stuff with mining metrics, and we'll go into this week's headlines. This one's from our friends over at the MinerMag in their weekly, talking about the return of the Bitcoin HODL despite bleak Q2 margins. So Q2 numbers for Bitcoin miners are coming out now. That is August 1st. The first one out the door was Riot Platforms, and they basically showed that things are a little tight now. The halving happened in April. A lot of people put out those Q1 numbers and saw really strong revenue. Then your revenue gets cut in half. And moving into Q2, people are wondering, okay, what's this going to mean? Is there enough diversification on HPC or the energy side to be able to protect margins for Bitcoin miners? And as we can see here, not so much. Things are really, really tight for Bitcoin miners. So just a quote from the piece for Riot itself says, quote, "The Texas-based mining giant produced 845 BTC in Q2, a revenue of 55.8 million, implying an average revenue of 66K per Bitcoin. Direct cost of mining Bitcoin after power credits was $25,000 per coin, and then $41,000 before power credits. So that kind of shows you that it's a lot tighter than people would want. And unless you have a very good strategy, you're looking at a pretty tough cost to mine Bitcoin at the moment. So compare that with what we just talked about, and hash price and hash rate going up, miners are in for a world of hurt. And I'm very much expecting to see some of these other Q2 numbers look way worse than what we're seeing with Riot. Riot's, the margins are maybe a little tighter than people would want, but I'm waiting to see some really horrendous numbers. We had Patrick Fleury from TeraWolf, he's a CFO on the show about a month ago now, and he predicted this. He said he was kind of waiting for the Q2 numbers. Wasn't really gloating over it, but he was like, those are going to be some tough numbers. Okay, we'll leave that aside. Charlie, I'm going to throw it to you to go over to Russia.
Yeah, so if the last decade was about tacit, ineffectual banning of Bitcoin mining from state-level actors, the next few years, maybe the next decade, will be about explicit acknowledgement of Bitcoin mining from state entities. So shout out to Bitcoin, shout out to the MinerMag for this scoop. They always have the good scoops. And granted, I don't understand the Russian Federal Assembly or Russian laws that well, but they basically said, we're going to acknowledge and say explicitly, Bitcoin mining is legal. Crypto mining is legal. There's a few takeaways from this. One, their co-author of the bill said that historically cryptocurrencies have been a tool for circumventing sanctions, and we want to just capture that, have you register with an entity with the state so that we can just properly direct these towards Russian, nationalist benefit, so that it benefits Russia. This is understood. This is intuitive. But there's some other interesting things. There's some implications here that are unclear about where the Russians can point their hash rate. So to which pool? This perhaps indicates that we might see Russians prefer to pool their own Russian hash rate together. Are we going to see our first actual state pool? Who knows? And then also, if you're familiar with the kind of the relationship between power production, energy production, and mining, a lot of these Russian Bitcoin mines are at the feet of gasifier plants or gas co-location. And so in this bill also says you cannot produce electricity as your primary activity to sell back to the grid. So that's pretty interesting. So it actually almost is more bullish on Russian hash rate. Then lastly, they say Russia currently ranks second in Bitcoin mining. I don't know if we officially knew this or not, but this is what the Russian co-author of the bill says. They currently rank second, and they wish to surpass the United States to be first place. Some of my conversations with ASIC brokers and suppliers have confirmed this. We saw this coming where a couple quarters in 2023, they said that they sold the most units to Russia in those quarters. So I think this is not coincidental to be right after the Trump explicit acknowledgement. It sounds like we're in a new era for Bitcoin mining of hybrid, maybe not state sponsored, but state acknowledged, and with the wind at your back this time.
Ready for a fact check?
Fact check.
This is not the first state sponsored pool. Venezuela tried doing that in 2021.
Oh, that's cool.
Yeah. So
would we call Volcano Pool from El Salvador? Would we call that a state sponsored pool?
Oh, I would probably call that one. Yeah.
No. Yeah.
But I think this is really interesting. There was also one thing at the bottom of the piece I saw that the bill would ban Bitcoin or ban cryptocurrency advertisements as well, which was notable. So they're packaging a lot in this piece.
What if we fast forward 2-3 years from now and are in a full-fledged House of Dragons style Putin versus Trump hash rate war where they're just trying to incentivize mining back and forth?
Sounds like you're talking about, what was that book called from that dude?
Soft War.
I mean,
no. I'm way more interested, Will, in what you think the equivalent of the attack power of a dragon would be in the mining industry. Would it just be a full-fledged?
A dragon would decimate a Bitcoin mine. Absolutely decimate it. We're getting into House of Dragon on the mining pod. I'm so here for it, though. Have you guys been watching it?
Yeah.
It's pretty good. It's pretty good. No, it's so funny. Software. Jason Lowry is just taking victory laps over on Twitter, even though I'm pretty sure a lot of what he's saying was nonsensical. But that's okay. We're all going to get blocked for me saying that. Let's go over to this piece. Again, the MinerMag, unofficial news provider for the mining pod, because they're putting the legwork in over there. So go check out their Telegram and their newsletter to get these updates, not at the end of the week. Or hang out with us on Friday afternoon. Check out what we got.
In the competitive world of Bitcoin mining, one name stands out: CleanSpark, America's Bitcoin miner. At CleanSpark, efficiency isn't just a goal, it's our standard. Our sophisticated facilities are built and led by expert teams who care about Bitcoin and the communities we work in. Scale, we've mastered it. Our large-scale operations have set us apart in the industry as examples of community-oriented building. Our track record speaks for itself. We navigate the complexities of the new economy with precision and with skill, continuously achieving operational milestones. Curious about how we do it? We invite you to discover the story behind CleanSpark's success at cleanspark.com.
Bitcoin miner Riot increases stake in Bitfarms to 15.9%. Riot invests $159 million in accumulating Bitfarms shares at average cost of $2.22. So again, this is like part 5 or 4 of the saga Riot Bitfarms. If you have not been paying attention to it, we have been talking about on the show for a little bit. Riot unveiled its desire to acquire Bitfarms. They put out a plan. They said that Bitfarms shareholders are not being treated fairly and that the leadership of Bitfarms is lacking. Bitfarms internally, of course, has had some shakeups. Their former CEO was kind of moved off stage and then he sued Bitfarms. Now they have a new CEO, Ben Gagnon, who's been a friend of the show and been on the show multiple times. And so they're kind of in disputes right now. Meanwhile, Bitfarms have been trying to fight back against this encroachment by Riot to purchase the company. They issued a poison pill at 15%. So if Riot purchased more than 15% of outstanding shares, Bitfarms had the ability to dilute all shareholders and beat back that encroachment. The new news here is 3-part. One, we see that the regulators in Canada, I believe it was Ontario regulator, said that the 15% was too low. It needs to be a 20% poison pill clause. So that was moved up to 20%. And then Riot purchased more. So they have a larger stake at 15.9%. So they moved up about a percentage point. And then the last part is that Bitfarms did put out a new sort of poison pill clause where there's some sort of like shareholder rights agreement. So if Riot gets to a certain size and keeps purchasing, then current shareholders have the ability to enter into more of the governance of Bitfarms. And I don't think we need to get into the specifics of it. You have the MinerMag if you really want to dig into this more as a shareholder, one of these two companies. But I think it's good that we cover on the show because these are 2 of the largest Bitcoin miners out there, and any sort of deal between them would make a mega miner, a huge miner. And if this doesn't happen, it's also a ton of capital for our shareholder friends out there.
I'm just sitting in the back eating popcorn. I hope everybody wins, but it's crazy to see this level of flexing out in the public mining markets. I expect this to happen regularly, just in as commonly as it happens in other like commodities production industries.
Yeah, when is it going to be an antitrust law that Riot cannot accumulate them?
I feel like that's going to happen sometime in the next decade.
Yeah. Because the Spirit Airlines one with they're going to merge with Frontier or JetBlue or something like that. I forget who it was.
Yeah, and telecommunications, internet provider. Yeah.
Antitrust to protect the Bitcoin network. There's no end consumer for these companies, of course, besides shareholders. So we need an antitrust for Bitcoin. Okay, we will throw it to the next topic, unless you have anything there, Matt.
I would be very shocked if antitrust came in and blocked merger.
I think I'm amazing.
More worried about maybe the opposite, someone trying to consolidate power to go against.
Yeah.
We'll move on to the next topic. Unless you want me to make more House of Dragons references about there's 2 sides and they're fighting and they're trying to get. No, we'll just keep going.
I could see the antitrust being flexed maybe on the energy and infrastructure side. Maybe declaring some of these more public goods.
Fair. Okay, next topic. Cantor Fitzgerald CEO announces $2 billion Bitcoin financing business, defends Tether at Bitcoin 2024. Charlie, take us through this one.
Yeah, and I'll lean on Matt to correct me and maybe provide some color on the relationship between assets under management and what a lending, like what 2 billion of lending would look like. But basically, I think this is one of the more interesting talks at this Bitcoin conference. Was the CEO of Cantor Fitzgerald, very long storied, respected, and huge financial services company. He says he owns, quote, a shed load of Bitcoin. He is a fan of Bitcoin, as are all his partners. So they are announcing a $2 billion initial financing note, which will increase in increments of $2 billion for Bitcoin mining. Like, this is huge. He uses some of the language which I think Bitcoiners love to hear. Like, my view is that Bitcoin, like gold, should be free to trade everywhere in the world without limitation. And then also, while this is not mining related, he specifically defends Tether. And I think that was equally interesting because Tether's been, under fire a lot for who holds the treasuries, and Cantor Fitzgerald has been pretty clear that they own a lot of them, and he is pretty defensive against Tether when the blessed stablecoin domestically in the U.S. is USDC. So you have the CEO of Cantor Fitzgerald coming out hard in the favor of Bitcoin mining and defending Tether's liquidity. So this is huge. I feel that's almost bigger than Trump's lip service. It's like, this is real money, and people who make decisions with giant amounts of money being explicitly pro Bitcoin and Bitcoin mining.
I haven't gotten into the specifics of the story, but it seems to me like the $2 billion is what they are willing to give to borrowers, right? Where they're willing to lend to borrowers. So they would accumulate debt assets, right? And they would basically be allowing Bitcoiners to collateralize their Bitcoin and take on leverage in dollar form. What kind of those leverage ratios look like and what the actual interest rates would be, those sorts of things are, I think, major outstanding questions that if they've talked about, I don't have color on at least. But I mean, I believe Cantor Fitzgerald is one of the, I'm going to get fact checked on this one, maybe 20 to 50 primary dealers with the Fed. Like they're significant. They're not just any kind of financial institution. So I would say that this is significant. It was a bit of a shock to me, truthfully, that this announcement came out and that C-suite spoke so highly of Bitcoin. But it's neat. I mean, the more legitimized and the more financial markets that form around Bitcoin, it grows up a little bit. It's healthier. It gets more liquid. And so I'm generally a fan of financial infrastructure and kind of well-regulated, well-qualified, that have some strong historical precedent players entering into the space. No, thank you, FTX. Goodbye. Good riddance.
I got you in that fact check. Turns out you are correct. Cantor Fitzgerald is one of 24 primary dealers authorized to trade U.S. government securities with the Federal Reserve. So that's a big deal. And he noted that in his speech. They also have, see here, $13.2 billion in assets under management as of December 31st of last year. We don't know exactly what the terms of this $2 billion lending facility would look like. It's probably dependent on every single miner. The one thing I've seen miners talk about with this is like what's going to be on the other side of these debt obligations. I'm assuming infrastructure. That's mostly what people have. Maybe these energy contracts. Matt, I'd be curious to get your thoughts on this, because for a loan, we don't see ASIC loans anymore. Maybe there's some sort of equity with these things as well, but I would assume some of this or most of this is debt-based, or what are you thinking?
See, I thought that the collateral here was actual Bitcoin, but that is very interesting to collateralize energy infrastructure or some of the land, like the different kinds of capital assets that miners own.
It could definitely be a Bitcoin collateralization. I don't see many specifics so far, and a lot of these deals are very bespoke. So we'll see them tune out. Okay, anything else on that topic?
Yeah,
Charlie?
one kind of subjective observation, which is this guy spoke on the main stage at the conference, and he's the CEO of, again, one of 24 folks, big institutions with the Fed. He was very emphatic. Like, you've got to watch the talk because he's like almost yelling at some points. So this is a guy who's very prominent, literal, insider in American financial institutions. And he's becoming hot under the collar with his opinions about Bitcoin. So I almost next year he's going to be like Max Kaiser ripping up dollar bills practically. So I could. This is the thing. Some of these folks at the top are being orange pilled hard, and you can see it. So it's crazy to see that kind of language and emphasis on behind the big podium.
It's hot out this summer, and your ASICs might need some tender love and care. Contact Vitamine today for on-site ASIC repair. With Bitmain certified repair technicians, Vitamine has you covered, including repair shops in Colorado, Texas, Oklahoma, and Washington State. Or have them travel to your site and train your team. PSUs, immersion tanks, hashboards, and more. If you think ASIC repair, think Vitamine. And for a limited time only, use code MININGPOD to get 20% off your hashboard repair. Again, that's code MININGPOD to get 20% off your hashboard repair. Contact Dan today at dan@vmasic.com and let him know that the Mining Pod sent you.
Okay, so MicroBT and Auradine launched new units at Bitcoin Nashville. We'll go through the MicroBT ones first. So again, friends from MinerMag, the M6XS Plus. They're getting really crazy with these names. Bitcoin miners with 17 joules per terahash. So they launched a few different units. One thing that's notable here is that the MicroBT founder and CEO actually showed up. I believe he lives in China, Dr. Yang. Oh, I don't know if I'm going to pronounce his last name anywhere near correctly, but yeah, we'll gloss over that unless you guys want to give it a crack. But he came from China, normally does not leave, I have been told. So it's a big deal that he came over to Nashville. We can see 3 new units plus another one, the M64 that's not pictured here. The M60S air-cooled, it's 190 to 210 terahash at 17 joules per terahash. The WhatsMiner M63S, 17 joules per terahash, 390 to 450 terahash, which is a water-cooled unit. And then the M60S Plus, again, 17 joules per terahash at 280 to 318 terahashes per second. And then we'll go over to the Auradine units, which were also super impressive. Auradine ships its 3 nanometer Bitcoin ASIC, boosting 14 joules per terahash efficiency. A few little notes in here I thought worth mentioning was that they're going to start shipping these in Q2. They claim to have 30 customers already. They didn't give a lot of information on who those customers were. But there is that. And these are 3 nanometer with output of 375 terahash per second. So what do we think about these new units? I think the Auradine ones, I still have a lot to be convinced of if this is going to be able to be delivered in scale and with the numbers that they're boasting. They did give live presentations, and I saw confirmation of the numbers with like screenshots. The MicroBT ones also look pretty solid and kind of like a rebuttal to what we saw in Vegas a month ago. So those are my thoughts on it. Charlie, Matt, anything?
Fast ASICs get faster. It's I think we may have mentioned this a few times in previous episodes, but this time might actually be different. We may have a real ASIC manufacturer on our hands, a new entrant, and that gets me very excited.
When ASIC commodification, gents, these things just keep getting better and better. I'm interested to see what pricing these new machines come out at, because ASICs are pretty cheap right now. Like they might have to discount them, put out a good offering to drum up a good amount of demand. Although there's quite a bit of WhatsMiner fans out there, so maybe those will get bid out the box no matter.
I'm a WhatsMiner fanboy. I've deployed those forever. I just wish that these people who manufacture these would come up with more coherent names.
I know.
It's been a
to say
decade.
Podcast.
Yeah, I still don't know what the 21 stands for. Come on, yeah. So
the for the audio strictly only listeners, the picture used for the article, it looks like the booth that WhatsMiner put out had hash rules everything around me on it, which I believe we would say cream, which is that's an interesting one. But yeah. That's a fun marketing one. Will, what do you think of that?
I love it.
Iggy Azalea did just launch a token, so I maybe there's a Bitcoin an ASIC manufacturer partnership to be had.
Whoa, with Iggy. Okay, last topic. We'll throw it over to you, Matt, for this Marathon story. I'm going to throw it up on the screen.
Yeah, Marathon bought $100 million worth of Bitcoin. Marathon, I believe, right now has the largest amount of energized hash rate. They have basically said they're back to a strategy of HODLing and just piling up a strategic reserve and not selling it. This was their strategy also, kind of in the last cycle, really 2021. But they kind of went back on that a bit in 2022, and kind of like the the deeper bear market when miners were really struggling. They were liquidating some. It looked like they also basically financed this with an equity offering that they raised last month. So a little bit of Sailorism to this buy. It seems like to me.
100%. Totally, this is totally a Sailor move. They're trying to become like a Bitcoin stock, even more than just a mining stock.
A game of who is the most bullish, it seems.
I wanted to bring up a few things on this one because I thought it was interesting. One, what's the trade-off with using an ATM to purchase Bitcoin? Does that reward shareholders, or is that a bad play over time and shareholders are not only diluted, but they lose the value because Bitcoin goes down? So that's the gamble there. Two, Marathon has done this kind of thing in the past and they've ended up selling Bitcoin. So we'll see if this is a good time. This is a trading strategy, right? And Michael Saylor and MicroStrategy are able to do this because they're able to basically finance their purchases of Bitcoin for no money, right? They just are able to do it because they are a large company and public and all that. Marathon seems to be taking the same play, but I think how people categorize Marathon is Bitcoin and maybe an energy company. And so I wonder if that's going to change in investors' minds. We had Frank and Aiden from Hive on the podcast earlier in this week, and Frank made a really interesting point about 30 minutes in the podcast talking about how gold stocks were valued back in the 90s, and the gold stocks with more gold on their balance sheet had a higher value for investors. And so Hive is taking that approach where they want to accrete Bitcoin to the balance sheet. And he made a similar point here with Marathon, like the more Bitcoin on the balance sheet, the more incentivizes shareholders. That being said, if you buy Bitcoin now and Bitcoin retraces, like that's not great for shareholders. And if you don't sell at the right time, well, we believe in the 4-year cycle theory, then you are going to be taking a loss on this Bitcoin probably at some point if you sell at a low point. So I don't know, ballsy, but we are in Bitcoin mining. Charlie?
Yeah, I think that's a really good insight from Aiden with Hive. I was not aware of that. I keep bringing up like it, we don't see in sophisticated commodities industries that the producers of the commodities then hold the actual assets on their balance sheet. Like, you don't want to be double exposed. You'll typically see them take financial like hedges or positions to hedge their costs of production. But maybe in the adoption cycle and maturation of these industries, like we saw with gold, maybe they do take direct exposure. I don't expect this is the case in 20 years.
Any other thoughts as we round up the day and get into the weekend? Matt, what are you doing this weekend?
This weekend, I'm fixing up a grill that got a little rusty.
What kind of grill?
I might go on a float.
I'm a new dog owner, so I'm trying to train a dog.
What kind of dog?
Thing. An Australian Shepherd.
Wow, those things
Hope you
need
have
a
enough
lot
energy.
of walks.
That's gonna be fun. Yeah.
You have to be
I
outside
get my
a little
steps
more.
in. Yeah.
Okay, well, that'll do us for the Mining Pod, the news roundup. Go and subscribe anywhere you listen to podcasts. If you're watching on YouTube, check us out on the RSS feed or subscribe to the Mining Pod YouTube channel. Go check out our newsletter. We have more content coming in August, tons of podcasts from Bitcoin Nashville, and also a new weekly episode, which we will be talking about here shortly. Well, we'll see you guys next week. Peace.